10-minute stock trader takes calculated risks, understands that the treasure lies in knowing the data, doesn't guess at trading, follows their plan, doesn't blame others, takes responsibility, and knows why the market works. A 10-minute stock trader is smart. A 10-minute stock trader understands that they can make the world a better place. They spread joy to others, they follow their dreams, they build each other up, they use money as a tool, and they spend as little time trading and as much time living as possible. Welcome to the 10-Minute Trading Room, where we take the guesswork out of trading.
There we are. How are you guys doing this morning? Beautiful Friday morning. Happy June 3rd, 2022, year of our Lord, 2022. I am so excited to talk about this today. We're going to be talking about avoiding the boom and bust cycle that most traders go through. Now, I personally know I went through this, and maybe you went through this as well. I know a couple of the members of the trading room. They've told me their experiences of how they've done really well in certain market environments and then not so well in others. And we want to avoid that. Clearly, we want to make sure that everything we do is moving our equity curve up, right? Now, clearly, not every trade will win, but every action we take needs to be moving it in that direction. That's the point of what we're trying to accomplish every single day. So if you are here, please let me know by saying hi. I have a couple things to give to you guys today, not just the webinar information, but I have a few things I need to give away. April is here. Thank you, April, for coming. April is our media coordinator and customer service manager over there. She is doing an amazing job. Thanks for coming, April. Donna, good to see you. Good to see you. Kavan, my friend, boom. Now, I am waiting for two individuals in particular to let me know that they are here because I have something to give them. I'm very excited about that. But while everybody is loading in, be sure that you share this with your friends. The cost of admission is sharing this with your friends. And as members of the 10-Minute Trading Room, when one of your friends comes and watches live, I will pay for and ship you a bear market t-shirt, which could be an ancient relic in the next couple days, the way the market's turning. But I will ship you the bear market t-shirt. So be sure to share this with your friends so I can, pay the $20 to get you a bear market t-shirt. So looking forward to that. So let's do this. Let's pop open the slides. I will wait until those two people arrive to make the announcement. Hopefully they won't take too long. So I'm really excited about that. Let's move into the slides here real quick. This is today's webinar, The Truth About Trading, How to Avoid the Boom and Bust Cycle that blows up 90% of traders within 90 days of starting. Now, this is exceptionally true in 2022. I saw a chart the other day. It was a Google trend chart, and it showed the interest in stocks, like the search term stocks peaked in 2020, 2021, and is like at 0% now compared to those 2 years. And it's because trading got a lot harder. A lot of people boomed in the last 2 years and busted within a couple months. And it's not just amateurs. We're going to be talking about that too. But this is the truth about trading. And the truth is, Maria is here. Maria, I am so excited to announce that Maria is the official winner of the Wealth Ripple Effect Challenge. Now, for those of you who don't know what the Wealth Ripple Effect Challenge is, I wrote the Secret Investing book. And what I do is I give this away to everybody, right? I have boxes of them, and I just literally hand them out to people. And on the internet, I'll say, hey, come get a free book. Just cover the shipping cost. It cost me $5.33 to print the book, $6.54 to mail the book. So that's all I ask for people to do is cover the shipping cost. But here's the thing. For our 10-minute stock traders, I wanted to create a challenge. My challenge was I want you to give this away to as many people as possible, and I will not only pay for the book, I will pay for the shipping. All I ask you to do is to hand this to somebody else who you think needs it. And my idea with the wealth ripple effect, and I learned this from Tony Robbins, is the idea of, if I can teach you how to trade the way that the market wizards taught me how to trade, you can then take that skill and go on and change your life. And maybe in the process, you could support your child going to college and then maybe on to medical school. And then your child goes on to medical school, becomes a doctor, becomes a heart surgeon, and maybe one day I ate too many cheeseburgers and I have a heart attack and I'm out on the floor and they wheel me into the hospital. And when they get me into the hospital, they're cutting me open and your child looks down and is performing that surgery because you were able to put that child through college, because you learned how to trade, because you were given one of these books. That's the wealth ripple effect that I'm talking about. And that is my primary motivator in life. Not because I think that I'm going to die on the table one day and I need somebody to come resuscitate me, but because I know that is the biggest difference that I can make, is to give this to as many people as possible. Not just this book, but everything that we do. So yeah, Maria murdered it. Maria totally murdered it. She won the Wealth Ripple Effect Challenge by a landslide. We gave away 147 of these books. So just to do the quick math so you guys know, and plus there were some traders who live internationally, which cost me additional. But let's say 533 plus 654 times 147. This challenge cost me nearly $2,000 out of my pocket to get these into other people's hands. And I am thrilled to do that. Maria, congratulations. As the winner of the Wealth Ripple Effect Challenge, I am sending Maria a $150 Amazon gift card, which is approximately 1 month of the trading room. So Maria, we're going to send that out today. April's watching. Do me a favor. Go ahead and ship out that gift card to Maria while we're chatting right now. That would be amazing. Maria, congratulations. And congratulations to everybody who participated. Everybody got 2 books to start with, and I was super thrilled to have such participation, spreading that wealth ripple effect. Maria, congratulations again. All right, Brian says, way to go, Maria. Glad to see you, dude. Yes, congratulations, Maria. So like I say, before we get too deep, be sure that you are sharing this. That's the cost of admission today. Share this with your friends, spouses, relatives, whomever, to make sure that you get your bear market t-shirt that I will send out today. All they got to do is come and just say hello, like our friend Chewy just did. Kavan with the hand clap. Absolutely. Congratulations again, Maria. All right, so let's get back into the slides for today. There is one more announcement once that person shows up. I'm very excited. We've been working hard on this for a while. Let's go to this screen here. All right, so this is the truth about trading, how to avoid the boom and bust cycle that takes out 90% of traders within 90 days of starting. Now, I have to have a legal disclaimer. Let me move my, how can I do this? There we go. Move myself out of the way so you can read this. Basically, I want you to know that I don't just read books. I stare them down until the information comes to me, when the information jumps out and comes into my head. Time waits for no man, unless it's me. If you spell Christopher Uhl in Scrabble, you win every single time. And basically what I'm trying to tell you is, don't listen to anything I say. That's my legal disclaimer. Don't listen to anything I say because hang on. I once roundhouse kicked someone so hard that my foot broke the speed of light. These are totally Chuck Norris jokes that I'm repurposing to really just get the point across of, hey, don't listen to anything I say. But if you do it at your own risk. There, with that legal disclaimer out of the way, let me know that you're here in the chat if you haven't done so already and where you're from. Maria, you are so incredibly welcome. All right. Now, don't forget about the webinar challenge where we'll be giving these away. All you got to do is have one of your friends show up and say hi. Now, I like to do this every time we do a web class like this because I really want to drill down the point of what a 10-minute stock trader is, right? This is a lifestyle. This is not, what's the best way to say this? This is not a get-rich-quick scheme. When a lot of people start into trading, they immediately think of, the best case scenario of every trade I put on, I'm going to get 1,000% return, and I'm going to take $1,000, and I'll be a millionaire by the end of the year. That's not realistic. But that's also the reason why I try and share that this is a lifestyle. And these are some of the things that members of the trading room embody in this lifestyle. A 10-minute stock trader takes calculated risks. They understand that the treasure lies in knowing the data. They do not guess at trading. They follow their plan. They do not blame others. They take responsibility. They know why the market works. 10-minute stock trader is smart, understand that they can make the world a better place, spreading that wealth ripple effect. They spread joy to others, they follow their dreams, they build each other up, they use money as a tool, and most importantly of all, they spend as little time trading and as much time living as possible. So if that sounds like you, if that sounds good, know that you're in the right place. Now on today's agenda, we're going to be talking about 3 sections here. They are why early success as a trader almost guarantees that you're going to blow up your account. Number 2, the 3 focus areas every trader must master. And number 3, stop treating trading like a hobby. This is the most lucrative career in the world, but only if you treat it that way. And I'm really trying to bring down the time of these webinars. The last one was over 2 hours long. Clearly, I just can talk for days and days and days on this topic because this is my passion. So, I do go to a trading psychologist, and when I went to him last, he's like, "How long are your webinars?" And I was like, "Well, sometimes an hour and a half, sometimes 2 hours." He's like, "You gotta cut that way down. People are only going to listen to as much as their butts can absorb, like a preacher in church." You know what I mean? So I really cut down the slides by about half of what I normally would do. But that doesn't mean I'm going to give you less information. It just means I'm going to talk less. Focus more on the objectives here. So if that sounds awesome, let me know by typing yes in the chat box. And we're going to get started here. And please ask questions as we go. There, of course, will be things that you ask questions about. Just be sure that you put it in the chat box. I do my very best, as the members know, I do my very, very best to address every single thing that the members put in because I want you to know that you are valuable, that you are important, and I want to make sure that you are 100% on top of everything as we go. So yeah, if I do not get to your question, just know I'm not ignoring you. Continue to spam the chat box until I do. But today, if you are not already of the 10-minute trading room, I'll show you how to get $5,488 of trading education for free, which these guys are already getting every single day. So promise me that you will not use these powers for evil when you see how to trade in 10 minutes a day. Because when you become a hashtag 10-minute stock trader like us, it is going to change your life. Now, disclaimer, I'm going to show you the process, but this does not guarantee that you'll be profitable. And this is one of the people that I learned so much from, and this is Richard Dennis. And he says, "I always say you could publish the rules in a newspaper and nobody would follow them. The key is consistency and discipline. Consistency and discipline is what you're going to need to be successful. The world-class traders that I learned from, they all have one thing in common. They have rules. And they follow those rules with consistency and discipline. Because, like Richard Dennis was talking about here, this dude at 29 years old had made $290 million trading. So he knows what he's talking about. So I'm going to be giving you the rules today, but I got to let you know, rules are boring. But rules make you money. But I need you to promise me this one thing. Once you learn the rules, you will have consistency and discipline to follow the rules. Because when you follow the rules, you're going to be trading like the greats. And these are the legends that I personally learned from. Mark Minervini, I learned an incredible amount from my time working with him. He was a 1997 and 2021 U.S. investing champion. The first billion-dollar hedge fund manager, Larry Hite, I got the opportunity to learn from. Market wizard Tom Basso, Mr. Serenity himself, and Steve Burns, who I'm going to be talking about more in today's web class here, best-selling millionaire trading author, the original market wizard himself, Jack Schwager, and the trend following pioneer, Richard Dennis. I took their best lessons and I created a strategy to manage a portfolio in only about 10 minutes a day. Now, Tom Basso, he said to me one day, he said that his strategy took 20 minutes and that he needed to learn from me if mine only takes 10. And I'm like, no. You laid the foundation. I'm just standing on the shoulders of giants here, mister. Now, my goal with this web class is to show you two things. The only way for you to become successful as a trader is through 10-minute trading. And I mean that. The only way to do 10-minute trading is with the strategies I'm going to teach you today and what we use every single day inside the 10-minute trading room. So who am I? If you don't know already, my name is Christopher Uhl, founder and head trader at 10minutestocktrader.com, awarded top 100 people in finance twice, top 100 global leaders in finance. My podcast has been the top 10 iTunes investing podcasts, been on TV hundreds of times. My company was one of the most 20 innovative companies for 2020. And here's a few of the places you may have seen me on: Benzinga, Yahoo Finance, where else? RT America when it was around, TD Ameritrade. I've been all over the place. And in 2021, my returns were 172.41%. But it didn't start this way. And I need you to know, and this is why I do this every single time, because I want you to know that you can do this. Because it didn't start out this way. I grew up in a double-wide mobile home in rural Texas, and my parents still live there. I went to a small school in Arkansas, had about 3,000 people in it, and my goal was to just get a degree and get out into the workforce as fast as possible. I do not have an Ivy League degree. I didn't work on Wall Street, and I don't have a hedge fund yet, but that is one of my goals in life. And I want you to know that you can do this. You can learn the rules to be a successful trader, but you cannot, under any circumstance, think you know more than the market. And this is where a lot of people mess up, because once they get that taste of success, they think they know more than the market. So let me repeat that once more. You cannot, under any circumstance, think you know more than the market. But here's the thing. Trading's easy. Just like one of our members who flies jets all the way across the world every single day, he knows how to fly the jets because he has a rule book. He knows specifically what steps and what actions to take this, 777 Max from one side of the globe to the other. And for him, it's easy. And for you, it can be easy when you follow the proven rules. So if you're ready to learn the rules, type yes in the chat box, and then we are going to get right into the first section. And while you do that, I'm going to catch up on the chat here. Brian says, don't reduce the content, just the slides. That's exactly what my thought was, my friend. Brian says, yes. April says, yes. Victor, you got here. Just got his books yesterday. Oh, dude, Victor, let me tell you something here, my friend. Hey, Dan, glad you made it, dude. Kavan, let's go. I do have one announcement before we get into this. Victor, I'm so glad you made it. Victor, we finally did it. We finally got the Trade Domination Trophy all set up for Victor. Victor completed the 12-week Trade Domination one-on-one consulting program that we have. And we've been working on this for a while because I really wanted to make something that he can put on his wall and be proud of. Not only does he know how to execute the strategies, but also something tangible that he can say, I did this. I completed it. I'm officially a 10-minute stock trader. Victor has won the Trade Domination Trophy, the first one we've given out. So Victor, I'm incredibly proud of you. This is already on its way to Peru. So you rock, my friend. And it, like I said, it's already in the mail. We've been working on this for a couple of weeks because I really want to make it something special. So you, dude, are awesome. And I'm really, really proud of you. Now, let's get back into the web class. Donna says yes. Maria says yes. Victor's flexing all over the place. Yeah, dude. All right. So here's the thing. Why early success as a trader almost always guarantees you're going to blow up your account. Now, that is not something that most people want to hear, right? When they get into trading, they think, oh, this is gonna be easy. Like Chris was talking about, geez, just throw on all the YOLO calls in Tesla. By the end of the week, I'm gonna be raking that dough. But as most people have found out, it's not quite that easy. But the problem is when you have the early successes. That's where things go really, really wrong. Now, this is what I researched. This is the quote, boom and bust cycle for the market, where you start with optimism, and then maybe you get some gains early on, and it's enthusiasm, and then it's exhilaration, and then you reach a state of euphoria. Now, this is not just in the bull market. This happens to a lot of traders. They accidentally get lucky early on, and they have these exact same roller coaster of emotions. They put on a trade, it works. They're like, oh, this is awesome. This is what happened in most of 2020 and 2021 to so many people who got their STIMI checks, if you remember. They'd immediately bought call options, or they immediately bought shares of anything, and it was going up. They could not lose money, it felt like. And they reached a point where the euphoria was just out of control. Everything they did turned to gold. But then 2022 came. And there was unease because every time they bought the dip, it didn't work. Then there was denial because, you know what? Clearly the market's going to come back. I'm just going to hold this until it comes back. The pessimism came in, and they're like, this company is just not doing so good. And then they panic sell. So now they watch their gains go all the way up and come all the way back down. Now they're sitting on losers, and they're capitulating. They're saying the market doesn't work anymore. Starting in 2022, clearly the stock market's broken. I'm smarter than the market, so I know this at this point. And they reach a state of despair because now they've got to go tell their wives and their husbands and their family, hey, you know what? It just didn't work out. It just didn't work out. And then when the rally starts again, they get that hope, the relief, the optimism. And this is the boom and bust cycle that we're talking about here. Not just for the market, but for trading accounts. And this is what happens the first 90 days. This is such a prevalent thing out there that it's called the 90-90-90 rule. And brokers bank on this. They expect this to happen. 90% of traders lose 90% of their capital within the first 90 days of opening their account. Because of this. They get success, they get exhilaration, they get euphoria, and they lose all control as it goes all the way back down. This is Ryan Pierpont. Ryan Pierpont is an exceptional trader. For 2 years in a row, he placed third place in the U.S. Investing Championship. And in those 2 years, his returns were 1,551%. That's astronomical returns. That's taking a $100,000 account to over $1.5 million in the span of 2 years. That's not bad at all. So Ryan knows what he's talking about. But Ryan also told me when I was talking to him is that he had success really early on. In the first 6 months of trading, he did exceptionally well. And then for the next 3 years, he gave away all that profits and some because he had no idea how he was successful early on and couldn't replicate it over that time. So he boomed and then he busted. But then he went on to have massive success. Now for me, my own boom and bust story, I'll tell you when I first started trading, this is when I was trading leveraged ETFs before I moved into options. I remember specifically literally no idea what I was doing. When I say literally no idea, I was like, the market's going up. There's this triple leveraged ETF. If the market's going up and I buy this one, that'll make 3 times as much. Give me all of it. I accidentally got up 20% in my account within, 60 days. No, less than that. Within like 20 days. Accidentally got up 20% in 20 days. And clearly I thought I was a genius, right? I got into that state of euphoria. And then, as you would expect, I proceeded to lose all of it. Not the entire account, but all of those gains were gone within 20 days later. So I had no idea what I was doing. Now, fast forward a few years, I had a similar situation, but this time I didn't have the blessing of having early gains. When I started trading options, so I was in ETFs for a long time. I got out, focused on my career. Then I was like, I need to get back into trading. So I went to the options world. And when I got back into the options world, I'll never forget this. I lost 2/3 of my account in 60 days. And I remember being on my, this is embarrassing, but it's true. And I want to relate this to you. I remember being on my knees in church, praying, "Dear Lord Jesus, please do not let me blow up this account." But that probably was one of the best things that could have happened to me. Because I learned risk. Now, granted, I ended up doing it a second time. But I realized something that day. I realized that I wasn't smart in the market. These high win rate strategies that I was told work, 90% of the time can, but I had no idea how to use them correctly. So I ended up blowing 2/3 of my account within 60 days of trading options. And I had somebody tell me one time, they're like, "Chris, you beat the odds." Usually traders lose 90% of their account. So you did great. So that was reassuring, I guess. But one of the ways that we can look to avoid this happening for you, if it hasn't already, or maybe it has, and you want to make sure it doesn't happen again, is to make your losses your smallest trades and your winners the biggest trades. Now, I didn't create this. This is one of the things I learned from Richard Dennis and his Turtle Traders. Is that when you're getting into a trade, you're going to put on one size. I like to call it units. Some people call it whatever you want to call it. I like to call it unit size. And that unit size can be 1 contract, 10 contracts, 1,000 contracts. It can be 1 share, 10 shares, 1,000 shares. The objective is to find the units and to start trading in units and not in dollars and not in shares or not in contracts, but focusing on your unit size. Because traders are like scientists. Well, really, I should say successful traders are like scientists. Because normal traders are like monkeys throwing rocks against the wall. But successful traders are like scientists. And I say that because they have a theory and they test it. It's a scientific principle. They have a theory. They then test that theory. And then they see what happens. And every trade starts as 1 unit. And if that trade works on the 1 unit, if their theory comes true on this 1 unit, they can add another. When they do, they're doubling their size, right? And if it continues to work, they can continue to add up to 5 total units. And that results in a huge winner. You have a theory, you test it. If it works, you double the trade immediately. Go from 1 unit to 2 units. And then if it continues to work, add another unit, add another unit, add another unit. This is not rocket science. You could literally do this with any trade out there. You do not need an entry and exit signal. You can say, "I will buy Tesla today." Why? Just cause. If it works, I will hold that and add to it as it goes up. But the problem is keeping the losses small. Because when you put on that trade in Tesla just because you feel like it, what do you do if it doesn't work? How do you quantify that? Successful traders are like scientists because they have a theory and test it, and every trade starts as 1 unit. But if the trade doesn't work, the trader knows very quickly. And the trader could take that small loss on his smallest position. Now, let me break this down for you. If you put on a trade and it's working, you're watching it go up, you can put on one unit, see, hey, this is working. Awesome. I love it. I'm going to add another. 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 You may not always get all 5 in. I think I've gotten all 5 one time ever. But you can add 1 and 2 and then get out of the trade. You get your exit signal, you're out. You can have 1, 2, and 3, get your exit signal and get out. But the point is that when it's working, that's when you stack your trades. You're adding to winners. You're pyramiding into trades. When it doesn't work, you should know very quickly. And I say you should know because it should tell you, hey, this isn't going up, it's going down. And when it's going down, you need to be cognizant. You need to be aware enough to say, oh, this isn't working. I gotta get out. But I'm only getting out on 1 unit. I'm not getting out on 5 units. That's where it works, right? If you put on the trade in 1 unit and it works, that's great. You may get out with just 1 unit. If you get in a trade and have 1 unit and it doesn't work, you're going to get out on your smallest position. But if it's working and it's trending and it's moving the way you want it to go, you can see humongous winners. We had a trade recently. I'm going to show you an example in just a few minutes. That was a 344% return on a on just something boring, on ketchup, Kraft Heinz. But it was because we stacked the winners and let them run as far as we could. And this is how in 2021, that's why my equity chart looked like this. It was big wins, small losses, big wins, small losses, small losses, big, small wins, small wins, small wins, big wins, small losses. And the rest of the year, after May, I could not make money. I would dip my toe in. Nope, didn't work. I dipped my toe in. I got a couple winners. Dip my toe in. Nope. Strategically holding cash, which we're going to talk about later, kept me from having the boom and bust cycle. I got the gains early on, but I did not have the bust. Now, this is 2022, right? You look at the equity curve for my account versus the S&P 500. The S&P 500 is blue. Green is my account. Only a 46% win rate. The market's been terrible, yet as of the time of this, up 10.99%. Now, clearly that's a lot less than last year at this point, but you don't know when those gains are going to come. I had somebody, actually, this is a great example. I had somebody who wanted to work in the trade domination program, and we had an interview with him because I don't work with somebody unless I have an interview and can confirm that I feel comfortable with giving you my time and that you are mentally ready to do this. And he said to me, he said, if I am not able to get back all of the tuition of the program within the first 6 months, can I have a refund? And I was like, no. And I do not want to work with you at this point. Let me show you what I mean by why that was a nail in the coffin for him. I thought he was great, but when he asked that, it was that question that he asked. Clearly, I would love to give him a refund if it doesn't work. It's not about the money to me. It's about being able to help somebody. But in 2022, I mean, we're looking at, ballpark 185% gains. I feel like it was at this point. Yeah, I would love to see that every 6 months. But then 6 months later, I couldn't make any money at all. The first 6 months of 2022, up 10%. That's totally respectable from a trading perspective. But that doesn't mean that these gains are over, because we could hit this line right after this. Or we may just spend the rest of the year looking at a flat return. There's no way to judge when your gains will come. You just can't. And you can't put a timeline on that. You have to take the gains as they come when they come. Now, getting back into calculating the position size, here's how to do that. Sorry, going off the screen a little bit. That was not on purpose. But you take your account balance and you multiply that by the risk percent. And I like 2%. Some people like other percents, but 2% or less. Then you're going to divide that by 2 times the ATR. Now, the ATR you can get on any stock going to here. You can just add the indicator of average true range. Average true range. That's what you need right there. Boom. And then it's going to say, okay, the average true range as of right now on this stock is 1.3. You can do that with anything, right? You can do it in Tesla at 56. You can do it in Coke at 1.4. But the reason we use the ATR is that's the average true range over the last certain number of days, usually like 10 days or 14 days. It really doesn't matter. The idea is being able to get, and there's no magical certain number of days, is trying to get the daily volatility. Now, when you do that, that's going to give you a share number, a number of shares. And then you can take that number and you can trade Coke, which has a 1.4 ATR, and have the exact same amount of risk as you can in Tesla that had a 56 ATR. And then you can take that and divide it by the option delta to get you the number of option contracts to keep for 1 unit. Now the question is, when do you add the units? Right? If it's working, if you got the 1 unit and you want to stack, when do you add more? You do that when the stock moves 1 ATR from entry. Now we just use ATR to calculate position size, but we also can use ATR as the next entry point. Why? Why, Chris? Why would we do this? So let's say Coke's ATR is, I'm going to round it to $1, okay? If we got in Coke today and it goes up $1, right? From 63.40 to 64.40. Come on, clickies. There we go. So at this point, it's moved 1 ATR up, 1 average true range. What does that mean? That means it's in a new range. And that's the time where if it's set up, you can add more because it's just set a new baseline. Think of it this way. Our baseline is today's price. If it moves up 1 ATR, 1 range, it just set a new baseline. And so you can have the exact same theories again. Hey, if it's moving up, let's add and see if it works. And if it moves up again, it's set a new baseline, and you repeat. That's how you let your winners be bigger than your losers, because you're stacking those winners as they're working for you. Now let's look at a couple examples here. So I mentioned this earlier, something boring like Kraft Heinz did really, really well on a 344% return on our initial investment in this stock. It's a boring stock, but it was trending. Got in on March 24th with 1 unit, doubled our unit size on April 1st. So within a week, we saw it go up. It reached a new range, and we doubled our size. Now it continued up from here, but it was showing us to be a little oversold, or overbought. And because of that, I do not add more unless it's 100% set up as brand new. So I just put on these 2 and let it rocket ship up. We exited the trade on April 18th when we got a confirmed exit signal, not on this chart, but on the market. The market turned bearish on April 18th. This candle right here. We'll talk about this more in a minute. Oh, actually, I'll put the 14th. This needs to be the 18th. We got a confirmed bear trend signal in the market, And when that happens, you can't hold anything long. So we got out. As you can see, it really just chopped sideways after that point and then had a murder day after that. A monkey hammer day is the official scientific term. Had a monkey hammer day and is now well below our entry price. But we didn't stress. We let it run as far as it could. We had our scientific theory of we think this is going to go up based on these historical results on our backtest and everything else. We watched it work. We got our exit signal. We took the exit signal. We're done. Now let's look at a trade that didn't work. Sono. This is one we put on recently. But think of this way. Rather than buying it, we were selling it. We were using puts in this case. So on this date, May 25th, we had the theory of, hey, this looks like it's in a very bearish posture. It's set up for entry from our bearish strategy here. We're going to go ahead and we are going to buy some puts. The very next day, we got our exit signal because it closed above yesterday's high. And look what it did after that. Just continued up. But we only had one unit on. So while we took a loss on this, it was small. We would have added at one ATR. We would have added again at another ATR from entry. But we took our loss on the smallest possible position. That's how this game is played. You let your winners be as absolutely astronomically big as possible. And when you have a loser, it's on your smallest size. You get in, you get right out. And like I said earlier, you know quickly if it's not working. There's no reason to hold this. If it works, it works. If it doesn't, it is your obligation to get out. So does that make sense? Everybody getting that? It sets a new baseline, and that's when you know to add more. But we let our winners get stacked, and we cut our losses with the smallest position size possible. So here's the key takeaway from this, right? Early success as a trader almost guarantees you're going to blow up your account. Because most of the time, those traders have no idea. They get their wins, they just get euphoric, but then they don't know how to control their risk. You have to cut your losers short and let your winners run. It's the old adage. It's cliche because it's true. But let's take that a step further. Cut your losers short and small. Then let your winners run and grow. Does that make sense? Rather than cut your losers short and let your winners run, cut your losers short and small. Let your winners run and grow. Okay, so does that make sense? Are you guys getting this? Let me know if you have any questions because we're going to move into the next section here. But this is so critically important. It's no longer cut your losers short and let your winners run. It's cut your losers short and small, then let your winners run and grow. All right, let me take a little drink of water here. So we're going to move into the second section here. I feel like I'm doing a lot better on time this time, Brian. I'm really trying. Plus, that was the biggest section. The next two sections aren't quite as big. Still powerful, but not quite as big. All right, so the next section is the 3 focus areas every trader must master. The 3 focus areas every trader must master. Now, I had a really amazing opportunity to work with Steve Burns for a while, and he just kept drilling into me. You need a quantifiable trading edge. I think he told me that at least 500 times. A quantifiable trading edge. What does that mean? It means it's math-based and has a positive expectancy. But really, the way that I describe a trading edge is a strategy that you know mathematically has proven to be positive, has positive expectancy. Doesn't mean it will work, but historically has shown to work. Then you need to have rules around that. You need the rules around the strategy. to make the trading edge. And then Larry Hite, he was the first billion-dollar hedge fund manager and market wizard Larry Hite. He drilled into me, you have to take losers. It's so important to take your losers. Just take your losers. Hey, Chris, I don't know if I mentioned this before, but take your losers. And, while you're sitting there drinking your coffee, be sure you take a couple losers while you're at it. People don't want to hear that. Real traders understand that that's part of the game. New traders walk in thinking they will never lose. I even interviewed somebody on the podcast one time where he said when he first started trading, he had the goal of being the first trader ever to never have a losing trade. That's the mentality that most people get into. They don't think I can cut my losers small and short and let my winners grow big, or let my winners run and grow. It's binary. It's I lose everything or I win everything. In fact, when I first started trading, I was talking to my dad about it. And he doesn't understand this world, and that's okay. But I was talking to him, and I was telling him how I had some gains, I had some losses, and he's like, oh, cool. So when you buy, let's say Apple stock. When you buy Apple stock, if it doesn't work, then you're just going to lose all of your investment, right? And I'm like, well, no. I mean, if it doesn't work, I'll lose some. Maybe I'll lose a few $100. Maybe I'll lose a couple $1,000. But if it works, I'll let it run forever until it stops working. I'm not just going to let it go to zero. That's irresponsible. That's stupid. Yet that's how a lot of traders think. They get in the game. They're like, I'm going to buy this. It's going to go to the moon or it's going to go to zero. But either way, I'm here for long haul. That's not how it works. Especially when you need to control your risk management, which is what Larry Hite was talking about. And with risk management, you need to have a strategy and you need to have rules that go along with it. That's how you have risk management. Is you have, when you're going to get it out, how much you're going to risk in each trade. And by combining the two, you have to still follow those rules. But this is probably the one of the best tweets I've ever seen ever of all time. I even have it printed out and posted on my my board over there. Your trading edge is your offensive weapon. Your strategy that has a positive expectancy plus the rules is your offensive weapon. Your risk management is your defensive weapon. That's where you know how much you're going to get in, how big your trade size is, how big your unit size is, and where you're going to get out. That's your risk management. And then psychology is the ability to balance both of these two weapons. And following the rules, right? We talked about how strategy plus rules is the trading edge. The strategy of risk management plus rules is the risk management. Following the rules, that's the trading psychology part and the hard part. Now, the truth about trading, how most people blow up within the first 90 days, right? It's this. It's because they don't have the rules. They may have accidentally stumbled into an edge, or they may have worked someone else's edge, but they don't know how to balance the edge. They don't know how to balance their position size. Yeah, anybody can make rules. Listen, I can tell you, one of my biggest failures was that I would make rules and then not follow them. I would make the rules to say, okay, if this stock that I bought at 100 goes to 99, I'm out. Of course, at 99, I was like, I'll give it another $1. At 98, you know what? It's a Friday. I'm sure it'll come back on Monday. 96. I'll give it 50 more cents. 92. Oh, okay. Maybe it's time to get out. Maybe it's time to get out. That sounds a lot like unease and denial and pessimism and panic and capitulation, doesn't it? Yeah. People can make rules, but can they follow them? Can they balance the weapons there? The way that I have found that works It's what I call an unbreakable trading plan. An unbreakable trading plan means it's not going to be breakable. You write it down, whether in a spreadsheet, whether on your chart, whether on a notebook, whatever. You write down the unbreakable trading plan. And then you know, I can't break this. I took the time to establish this plan. I need to follow it. Let's look at a few examples here of our unbreakable trading plan in action. I already showed you a couple in KHC and Sono, but here's one recently in Ring. So this one we got in on May 24th. And what day did we get out? Hang on. Where is my line right here? Yes. Got in May 24th. We're following the 5-day exponential moving average, not as a trailing stop, but as our planned exit point. We got in, immediately saw it was not working, immediately got out. Now, of course, our plan was to see it go down, as was drawn on the screen here. But we can't change what happened. We see the data that's presented to us. We made the hypothesis. We put on 1 unit. It did not work. We got out. That is following a plan, an unbreakable trading plan. And you write it on your chart or on a book or anything for you that you can read. That way you hold yourself accountable. Because sure, I could still be holding this and say, you know what? It could come back. I mean, it's already gone up 10% from where we got in. But it could come back. When you're in a trade, you lose the objectivity. If you can't step back with your plan and say, oh, if this happens, I'm going to do that. Here's the key takeaway that you need to know. Oh, actually, no, I have one more example. Kathy Woods, ARK, ARKK. This, hang on, I want to do this for the effect of seeing just how massive this was. I know this is smaller, but I'm trying to make the point. Zooming out makes it easier. It's round tripped. It is now at its COVID lows before its huge bull run even happened. It went up from bottom to top 350%, over 350%. And then managed to come all the way back down. This looks a lot like this. You have to have an unbreakable trading plan. I don't think they had one. I think they had the plan of, hey, we know better. We're smarter. And they round tripped that thing. And a lot of people lost a lot of money because of it. So here's the key takeaway on the 3 focus areas every trader must master. Number 1, you need a trading edge. You need to get your trading edge, whether it's working in the trading room or whether it's on your own, whether it's using an indicator, whether it's using a pattern. You need a trading edge. You need your risk management. Because if it does not work, how much money are you going to lose? Hopefully not much. And then you need your trading psychology, which is balancing the two, which is following the rules that you set out for yourself. Here's one of the things I like to call it. Be rigid in your plan. Rigid in your plan, saying, I will get in at this, I will get out at this, no matter what. And the no matter what means flexible in the outcome. No matter what means if I follow this, I'm going to be doing okay. Because I will have made as much as I possibly can or lost as little as I possibly can. Rigid in the plan, flexible in the outcome. So does that make sense? All right, let me know if you're getting this. I really would like to know if everyone's understanding. Let me know if you have questions. See, Brian, I told you that that section will be a lot shorter, but it really is impactful. Once you understand how to do this, this is so critically important. These are the rules you got to follow. All right, now we're going to go into the third section here. Stop treating trading like a hobby. Just stop, okay? This is the most lucrative career in the world, the most lucrative business in the world, but only if you treat it that way. Thanks, Brian. Thanks, April. It is the most lucrative career in the world, and you guys know this, but only if you treat it that way. This news came out today. I was doing research for this, getting all prepped before we started. This came out 2 hours ago. Tiger Global, one of the biggest hedge funds, lost 14% of their capital in May. It's down 52% for the year. The firm has lost money every month this year. And somehow they managed to lose money in 2021. This is one of the biggest hedge funds. Because they are one of the biggest hedge funds, I feel like they forgot a few of the trading rules. I feel like maybe they think that the rules don't apply. Because there really are only 4 possible outcomes when you make a trade. Number 1, a big win. Number 2, a small win. Number 3, a break even. Or number 4, a small loss. I didn't say big loss. Nope. These are the only 4 possible outcomes. You do this with your position sizing. You do this by pyramiding the trades and making sure your winners run and grow, and your losers are cut short and small. If you want to be successful as a trader, you've got to feel uncomfortable with open profits. Be okay with that. You're going to have to be okay with feeling uncomfortable when you see those big winners just continue to stack every day, because it has to do that. It will make up for the losses. But you're also going to have to be okay with being wrong. But most of all, you have to commit to doing this. You must commit. You cannot treat this like a hobby. You must be rigid in your plan and flexible in the outcome, with no days off. You know, earlier I said that 10-minute trading is about living the best life possible, which is trading as little as possible and spending as most time with your family or doing the things you love. But it also means no days off. No days off following the plan. You have to structure your life around the plan. This is your money. You can't take a day off. You can't put your money at risk and not make sure that you understand the risk is being taken every single day. When I go on vacation, I am most of the time in 100% cash. Sometimes, if I have a nice winter on, I'll let it run, and then I just check in once a day at the end of the day to see, has this hit my planned exit point that I already know ahead of time? If yes, I'm done. I'm moving on. If no, I close my phone. Well, I don't really close phones anymore. I lock my phone, I guess you could say, and I'm done. 14 seconds of actual trading. Does this hit my exit price? If yes, exit. If no, leave it on, move on with your day. We're not searching for trades. We're just taking them off. That's what you do when you go on vacation. That's what you do when, you've got a sick kid at home. You're not looking for new trades. You're just looking to see how I can manage my risk today. There are no days off when your money is at risk. You worked hard for that money. You poured your soul into your job. Or maybe this was inheritance, right? The house that I live in today was partially paid for with inheritance when my father-in-law passed away. And you better believe that I treat this home as a sanctuary. Because if it were not for his blessing, I don't know if we would have been able to have this home. These are the things you got to think about, right? You treat your money with the respect that you need it to be treated with. Money has energy. It's a weird woo-woo thought, but it's true. Money has energy, and if you don't treat it right, it's not going to treat you right. But even though you have to commit with no days off, you can also strategically use cash. Let me show you a few examples here. Strategically using cash. This is hard for a lot of people, especially newer traders, think that if they are not making a trade today, they are not a trader. And if they're not placing a trade today, they're not making money today. I disagree. If you're making a trade today, you're putting your money at risk. Once that money is at risk, things are different. But if you're strategically holding cash, especially in a market that's chopping up a lot of people, blowing up hedge funds like we just talked about, that cash is looking a lot sweeter as every day goes by. So let's look at a couple examples. Let's look at SPY. Now, I wrote some notes on here and tried to get the lines to match up. So here's a couple things in the market that we saw. On March 22nd, there was a confirmed bull trend, which didn't last very long because on April 18th, we had a confirmed bear trend. That was the day we got out of KHC. And from April 22nd to May 5th, this thing chopped sideways. Right here. People were getting monkey hammered in this chop. What did we do? From March 7th to March 22nd, we were in all cash. From this range here to here, all cash, till we got our bull trend confirmed signal. We were in. The last trade we made between these points here, we started trading March 22nd. We stopped making new trades on April 1st. From April 1st to May 6th, this entire move here, we were in all cash. We avoided this chop. We were not putting on new trades that were long, and people are getting totally monkey hammered. On May 25th, that was our last bearish trade, and we were immediately out of it the following day because it didn't work. We had our hypothesis, we made our trade, we were out. Back to all cash as the market is reversing here. $58 of the last 90 days, 67% of those days, we were 100% in cash. Strategically in cash. We were not down 52% for the year as one of the biggest hedge funds. 67% of the last quarter, we were holding cash. That's how we've survived. That's how we've thrived. Holding cash is strategic. That's what these flat lines are. That's cash. That's cash. That's cash. That's mostly cash. They lost 14% in May alone. Now, Minervini, like we talked about him earlier, his number one rule is wait in cash for proper setups. Well, how long do you wait in cash? As long as it takes. That's why we were in cash for 67% of the last 90 days. Waiting in cash. You need to have sit out power, as Mark describes right here, which means while we're doing nothing, less experienced, lesser disciplined, and less skilled investors are laying the groundwork for your success. Let them build the bases and then just buy the breakouts when they happen. Let them go through this boom and bust cycle. Let them go through this boom and bust cycle, and you focus just on the booms. And then get your entry or your exit signal and move out. That's what I'm trying to say here. You're not, of course, going to catch every top, right? It's not going to be where you get out right at the switch, but you can take most of it. Now, as we say, rules are boring, but rules make you money. Those rules were not followed by Tiger Global. Where's it at? There it is. Those rules were not followed by Tiger Global. Those rules are not followed by the people who are booming and busting their accounts. But for us 10-minute stock traders, doing okay. Not the best year ever so far. There's a lot of year left. Who knows? Rules are boring, but rules make you money. So here's the key takeaway, okay? Stop treating trading like a hobby. If your money is at risk, you are not allowed to take a day off. If you are strategically holding cash, there's a lot less pressure. But if you are in the market, your money is at risk, you cannot take a day off. Period. You must be rigid in your plan and flexible in the outcome. This is one of my favorite trading quotes ever. Strong beliefs that are weakly held. So does that make sense? Are you getting this? And of course, let me know if you have questions, right? Now, let me ask you a question. Do you think you can do this? Of course you can. Type yes in the chat box. Of course you can do this, right? We talked about how early success as a trader almost guarantees that you're going to blow up your account. We talked about the 3 focus areas every trader has to master. And we talked about you have to stop treating trading like a hobby. This is the most lucrative career in the world, but only if you treat it that way. Because like I said earlier, trading, just like flying a 777 MAX, is easy once you know how to play by the rules.
I'm giving away free consultations for members of the trading room. And I just want you to hear exactly what Kavan says.
I'm watching these stocks today, and it's like I have Peloton and Fastly, and I'm looking at them and they're following the back test as planned. And I'm like, I'm telling my friend Rob, and I'm like, yo, I'm happy. And he's like, why? I'm like, I finally found something, a setup that I can use. I can go in there. I don't need anybody. I can go in there and I can make the trade my own. I can follow your steps A to Z, and I can plan my trade. As you said, 10 minutes a day, no hassle, no headaches, ain't got to stress. And he's like, for real? So no, I have him taking the previous course that I took because it laid a foundation for me. And I'm like, if you understand what these guys are teaching, then hop on over to Chris, because these guys are going to lay a foundation with the little fundamentals, like, you know, like the basics. And then you when you transition over to Chris, then you will start understanding a little bit more. So, you know, you put in the roof on now. They build the foundation. I did my little thing. You put in the roof. You know, I'm eventually going to learn how to put some furniture in the house. As you can see, it's empty. You know? so you know, that's the goal, man. And I'm loving every minute of it. And the way you teach, it's simplified. And I ain't got to sit there and draw no trend lines. I ain't got to look for no breakout candlesticks. Like, which candle is this at the end of the day? Is it a doji candle? And I'm like, I'll never learn to read candlesticks pattern. Like,
you probably know candlesticks better than I do at this point. I literally don't know anything about them.
I'm like looking. I'm online on Amazon looking for a good, you know, candlestick, you know, book to learn to read candles. I'm like, I'm not learning none of this stuff. I'm just gonna pay attention to what Chris is doing. I put the lines on there, and dude, I take screenshots of them and I look at them every day, because yesterday I was showing everybody. Like, I called all the guys, because I have all the guys that come in the group is guys from my work. You know, you got Josh, Daniel, Chris, and Rob. You know, they happen on the live when you have. I invite them over and they love it. You know, I got everybody, you know, asking questions. Daniel is on there asking a lot of questions. he actually went and got TrendSpider. So slowly by slowly, everybody's coming to the table and like, want to learn, because step by step is no stress.
Do you want to take this to the next level? Right? Type yes in the chat box if you're ready to take this to the next level, because I want to do something awesome for you today. Let me ask you a question. Would you like my help in implementing this in your trading? That's where the 10-minute trading room comes in. This will allow you to finally live the life you have always dreamed being a trader would be. We have daily live video calls, daily trade alerts, daily new trade setups, daily portfolio updates, daily market analysis, daily trading psychology, which is so important. And everything we trade together. So it's like getting a call from me personally every trading day, with what we're trading and why we're trading it, which is really the most important part. Every trading day. Plus, you can get rid of all the fake gurus that you're still following on Twitter. I know I was really guilty of that. Spending hours searching on YouTube for the next YOLO stock, scrolling on Twitter. Everything we trade together. So as a member, you get everything. You get the daily video calls for free. Your membership includes the daily video calls for free. The daily trade setups, the portfolio updates, market analysis, trading psychology, all that's included for free. And then every other Friday, just like you're doing right now, we do live training and Q&A sessions. Just like the one that you're watching right now. And we'll be building new courses together with your questions and your answers. That's so important to me. And these courses, like I said earlier on today, will be available for members only. You get to watch me personally showing you all the lessons that we use in these courses in our trading. And you can ask me questions as you need, right? You get it all. He's showing you what's working today, and it's like an up-to-the-minute field report sent from the front lines of the cutting edge of trading, and then showing you how to model it in your trading fast. And the only way to have access like this would be if I were to sit in the same room with you and you were looking shoulder to shoulder or looking over my shoulder with me every single day. Now, here's what a few of our members have said, right? Robert's saying, your trainings and advice have accelerated my learning 10x. This allowed me to start doing things that were sometimes unthinkable. Listening to Chris is well worth your time, even if you're a seasoned investor. So who's this for? Well, it's for new traders. It's for experienced traders. It's for busy professionals, some side hustlers. Like I know I've got a couple of my 10-minute stock traders in there who are side hustlers, and then parents who just want to trade while their kids nap. And if you've never traded before, don't worry. Is it okay if I over-deliver? As a member, you're going to get everything. You're going to get the live training video calls, and you're going to get the live training every other week with me. And what else do you need to be successful? How about my flagship course, the AI Stock Trading System? And in this, we go step by step on how to use artificial intelligence in your trading. And also, I'll throw in the Real Trades case study course and the bullish, bearish, and neutral option strategy courses. So you'll be all set up there. And you're going to get all of that for free. As a member, you get everything included. That's the daily video calls, the live training and Q&A calls, and the full catalog of our best-selling courses. Okay? Well, what else would you need to be successful? We have video courses. We have our private chat room. And you're going to be part of a small group of high performers that are across the world that share valuable information that the rest of the planet never discovers. You're going to get the latest cutting-edge trading tactics and strategies before anyone else knows about them, exactly like we talked about today, including the live video trade alerts, the live market analysis, the live portfolio analysis, the live trade setups, the live trading psychology. All of that is included, and the live training and Q&A calls, the live look over your shoulder trading setups, live trading courses built with your questions and your answers. All of this is included as a member. You get all of this. Plus, I'm offering this now as a member. You're going to get at least one free one-on-one consultation like what we showed in Kavan's video. And this is coming from me. Who am I? Here's a little bit about me, right? I went straight to the pioneers of successful trading. I learned directly from world-famous market wizards and billionaire portfolio managers. And last year, the first year of implementing our strategy, we had a staggering 172.41% return on the first year of execution. So I'm pretty excited to share that with you. Right, you're going to get all of this, including the private one-on-one consultation with me. Total value $5,488. Right now, if all this did was finally set you up to see how real traders are profitable, do you think that'd be worth it? If all this did was help you shortcut the Wall Street learning curve, which hurts so bad, skip all those costly mistakes that most traders make and take years to figure out, would it be worth that? If all this did would give you the ability to model our trades and cut out the garbage that you see on the internet, you know what I'm talking about. Would it be worth that? So I had two choices. The first option was to go as cheap as possible to try and help, everybody out there. But the thing is that there are lots of freebie seeking knuckleheads, the guys on Wall Street bets, right? That really shouldn't be trading anyways. But the second option, which we went with, is the little higher investment in yourself, in the program. And in exchange, you get my time and my attention, and you're going to get you set up to get the success that you've always wanted. What would that one perfect trade be worth to you? Do you think that if you develop the trades like I did, you get the same results that I did? For the right person, this membership should pay you, clearly. If you're like most people, you would tell me you'd probably pay for years of membership with just the proceeds of one single trade. I know a couple of people have already done that. You'd probably tell me that everything else after that would just be gravy. And that's why I'm sending you our total trading system every month, right? I want to make this an absolute no-brainer for you. And I take a lot of pride in helping our members win big and avoid the big losers too. And that's why this is worth $5,488, because you're here today. You're now officially a 10-minute stock trader. I'm going to give you a monster discount. Of course, I wouldn't ask you to pay $5,488. The monthly cost of being part of the 10-minute trading room is only $147. That's it. That's like $4 a day if you think about it that way. You're going to get the daily live video calls with me. You're going to get the live training and Q&A calls. You're going to get the full catalog of our best-selling courses, and you're going to get a private one-on-one consultation with me. Total value $5,488. And the monthly cost, like I said, it's only $147. You can boil it down to $4 a day. There's no contract. You can cancel at any time. You've got two choices, really. The first option is you do nothing and not take this leap of faith and continue to struggle, continue to search on YouTube, continue to search on Twitter, continue to listen to those fake gurus. The first option really is nothing changes. Or the second option, you invest in yourself. The second option is you learn how the market really works. The second option, you give yourself a shot. See if this works for you. Like I said, there's no contract. You can cancel at any time. But don't you think it'd be worth $147 to show me how we set up every single trade, every entry point, and every exit point? And like Kavan said earlier, step by step with no stress. Do you think it'd be worth $147 for you to come spend an entire month right here sitting next to me, looking over my shoulder on every trade we make? Well, that's pretty much what it's going to be exactly like. I'm going to walk you through every entry, every exit, and why we do everything. Personally showing you what's working and what's not. The daily trade alerts are meant to give you that exact same experience. And here's something else to consider. Do you think it'd be worth $147 to jump online with me twice a month to get all of your trading questions answered, right? If you have any questions, you just let me know. I got you. I'm here for you. I do this for you. That's what we do in the live training and Q&A calls. Plus, you can see your fellow members every day, and you can ask them what's working for them, right? And any of those scenarios sound like it might be useful to you, then this is clearly a no-brainer. You can still keep all the courses for free no matter what. You're going to get the daily trade alerts. You're going to get the live training and Q&A calls, the full catalog for our best-selling courses, and best really of all is to get you set up for success, the private one-on-one consultation with me. The work we do together can change everything. You know that. This can change your life. This is the wealth ripple effect that we're talking about. You'll be able to take our trade ideas and plug them into your account effortlessly because I show you exactly step by step. You connect with me and your fellow members on our live video calls every day. Help you get the guidance and the focus that you need. So take this offer, become a member today. Remember, you're under no obligation. You can cancel at any time, and you can still keep all the gifts for free. And here's a couple other bonuses I want to tell you about. Here's 3 fast action bonuses if you sign up today. I wrote the Secret Investing book, and I want to send you an autographed copy in the mail, plus the audiobook. I'm going to give you the step-by-step guide to our 10 minutes to freedom trading strategy, which we use every single day. And finally, our top stock list, which I update this every single day. So every day that you get this is exactly what we are doing in the trading room. So let me show you how to sign up real quick. Just go to 10minutetradingroom.com. Click this big blue button right here that says click here to take the guesswork out of trading right now. Then you're going to go to the next page, and it's going to ask you a couple of questions like your name, address, and everything. Put in your credit card number to get started. Make sure that you put in your t-shirt size, because I want to send you a hashtag 10-minute stock trader, because you're going to be officially one of us, officially a 10-minute stock trader. So if you have any questions at all whatsoever, feel free to reach out to our team. We would love to help you out, love to get you set up, and love to get you as part of the 10-minute trading room. Thank you, everybody, for coming today. I hope that this was very enlightening, very useful, and I can't wait to see you inside the 10-minute trading room with us every single day, and in fact, later on today as we make our trades. Thank you so much. Hope to see you there.
All right. Again, thank you guys so much. Once again, congratulations to Maria for winning the Wealth Ripple Effect Challenge. And April should be sending that gift card out to you here in just a couple of minutes. Again, thank you all for coming today. If you have any questions, please feel free to reach out to me or anyone on the team. We'll be glad to help you. And I'm super, super excited to see you later on today in the trading room. And really, I hope you took a lot of good notes today, because we covered a lot. Have a fantastic day. I will see you later on today in the trading room. Talk soon.